Real estate versus stock market in 2022. Where do the wealthy put their money? Gold and real estate have always been two of the most trustworthy assets. Landlords were always the society's elites, and owning a piece of real estate was a pipe dream for most people. Prices have increased so dramatically that buying a home now appears unattainable. However, in the previous few centuries, the financial system has advanced to the point that it now offers an alternate method of increasing wealth. Warren Buffett is living proof that savvy, long-term stock market investments can pay off handsomely. In this video, we'll look at which is the superior investment. Is real estate still a good investment like it used to be? Or is the stock market a better option in the 21st century? The stock market versus real estate. There is a lot of discussion about it. Real estate investors argue that it is the best investment ever, but stock market investors argue the reverse. Both are correct to some extent, but the reality lies somewhere in the middle. However, in order to determine where they are, we must investigate each of them thoroughly. Let's start with the fact that real estate is costly regardless of location. People often work their entire lives simply to own one piece of property, as was likely the case with your parents. A large sum of money is required to undertake a single real estate investment. You can, on the other hand, begin trading in the stock market with as little as $5. Of course, it depends on the stock, but most firms, including excellent corporations like Apple, are traded at approximately $300 per share. So you can buy in one of the world's largest companies for as little as $300. But the expense doesn't end there. Unlike in the past when you had to pay a broker, you can now purchase stocks for free using applications like Robinhood. However, when it comes to real estate, transaction fees are rather high. That doesn't mean the stock market is doing better. The risks associated with the stock market are significantly larger. It's impossible to analyze the market, let alone individual stocks. We may be nearing the end of an expanding era in which the entire market is overvalued. And if you don't cash out before the market falls, your investment will most likely drop by 20, 30, or 40%. If history has taught us anything, it is that nothing is too large to fail. Apple, for example, is a massive corporation, as was Nokia once upon a time. In fact, Apple was once on the verge of going bankrupt. Every day, stock prices fluctuate for a variety of reasons. This can cause an emotional reaction, prompting you to exit the market at a loss, which is something that happens frequently, even among professional investors. However, this is not the case in real estate. The ground beneath it will always be valuable as long as it is in the city. Even in times of crisis, they often soon regain their value because everyone needs a place to live. One of our most pressing requirements is met by real estate. When you buy a home, you can rest assured that you will not wake up the next morning to discover that your investment has lost half of its worth. Real estate is also appealing because it generates passive income. You don't even need to work because rent prices are rising. It's one of the few assets that may give you with a strong, stable income with a dividend return of 7, 8, or even 10%. A dividend yield of 5% or greater, on the other hand, is highly rare for any corporation. In fact, some companies pay dividends, but these are hazardous stocks in which you could lose considerably more money due to a price decline than you could receive from dividends. It also works in the opposite direction. The stock market appreciates more than real estate. In 2019, home prices increased by 3.8% on average, while the S&P 500 increased by 28%, over 10 times higher. Amazon had a total rate of return of 1,209% in the last decade, whereas Netflix had a rate of return of 3,767%. In the stock market, companies constantly innovate to keep ahead of the competition. Therefore, you won't find such returns in real estate. Amazon has grown from nothing to a trillion-dollar enterprise in just 25 years. However, the corporate world is brutal. If you are at the top today, your competitors will knock you off tomorrow. It's not like having a piece of real estate in the corner that generates monthly passive income. There are two methods for dealing with taxes. Even if the stock price rises by 1,000%, you will only gain riches on paper. If you want to put that money to work, you'll have to sell that stock and pay a capital gain tax, which is 20% for long-term investments and up to 37% for short-term deals. There are several strategies to avoid paying taxes on real estate and invest the money instead. You can, for example, deduct the percentage of your mortgage payments attributable to interest payments on your tax returns rather than paying for the entire property up front. Depreciation can help you recover the cost of an income-producing rental property. Even if an investment property has positive cash flow, depreciation expense frequently results in a net loss. This loss was deducted from ordinary income, along with expenses like electricity and insurance. Even if you sell the house, if you buy another property, you can avoid paying capital gains tax. Real estate has a lot of tax advantages. It's not all sunshine and rainbows, though. Unlike stocks, where you can read the company's financial statements, do some study on it, and decide whether it's worth your money or not, real estate involves a lot more effort. It could take weeks, if not months, to find a suitable rental house. That's only one aspect of it. When you start renting it out, you'll face a variety of obstacles, such as finding good renters who will pay the rent on time and take care of the property. Something always breaks and needs to be replaced in the house. Thus, upkeep is always required. All of this will result in higher costs and expenses. That means it may be tough for you to relocate to another city or country because your property may require you to be present at all times. Investing in the stock market, on the other hand, does not come with the same drawbacks. You are free to go wherever you wish. From the convenience of your smartphone, you can keep up with the latest news and the performance of your portfolio. Endless opportunities in the stock market. What I enjoy about the stock market is that it can teach you more about business than a 4-year bachelor's degree can. Before investing your money in a company, you must examine its financial accounts, comprehend its cash flow, research its history to gain a better understanding of its future decisions, and become more familiar with its products and sales. Furthermore, you must have a thorough understanding of how the economic machine operates, as well as the role of banks in economic cycles. If you ever wish to create a company, that expertise will serve as the foundation. The stock market, however, is more than just buying and selling equities. Because the financial system is so complicated, there are more ways to make money in the stock market than most people realize, such as shorting, which involves selling a stock at high price and buying it back at a low price. Then there are futures and options, which allow you to profit by forecasting the future price of crude oil. We can't bring up all of that in this video, but you get the picture. If you fully understand the stock market, the door of possibilities will be opened in front of you. Even if you don't have time to accomplish all of that, you can put your money in an index fund and be certain that you'll get 10% return over time. Leverage. A stock purchase is nothing more than a digital document shown on the screen of your smartphone. You have almost little control over it because your single shares won't have as much impact. when the corporation has another 5 billion. Real estate, on the other hand, allows you to have complete control over your investment because you can touch, feel, and control it. You can employ leverage in addition to the passive income it can give, as we described before. If you have $25,000, placing $25,000 into securities will provide you $25,000 in value. Alternatively, the same real estate investment might be used to purchase a $125,000 property with a mortgage and tax-deductible interest. So, where should you put your money? The answer is that it is debatable. Real estate is a good alternative if you want to earn passive income. However, if you want to earn bigger returns, the stock market is unquestionably a better option, especially if you are a novice investor with limited funds. However, you should also consider your personal interests. If assessing firms and reading through endless paperwork is too monotonous for you, then maybe it's not for you. Other factors such as where you live play a role. Things may be different in your city or even country. So, based on your circumstances, you must come to your own conclusion. That's all there is to this video. Give this video a thumbs up if you want to support our channel, and subscribe if you're new around here. Thank you for watching, and see you again soon!